Well, it is nearly coming up to 5 past, so I think we should get started with the session. So yeah, just thank you everyone that's joined today. It's really good to have you on the session. It is going to be recorded as well for those of you that haven't managed to join. So I'm just going to set the context a little bit, and then I'm going to hand over to our experts. So you guys might have seen from the emails we've been sending out and the content that we've been putting on socials that there was a recent Supreme Court case which led to a firm losing quite a lot of money. So what we did is we spoke with our experts, Karen and Val, who I'll introduce in a little while, just to try and understand what the problem was and what happened here. Now, ultimately, what this boiled down to was the need for both this firm and all accountancy firms in general to be extra vigilant when it comes to the advice that they're providing to their clients. And quite specifically, something that's really, really important is clarifying the purpose of the advice that you're engaging a client to do. And Karen's going to talk a little bit more about that. So really, we've just brought these guys on the session today just to give you guys total confidence in, the processes you want to follow in the firm when it comes to providing advice, to make sure that you're managing your risk there, but also just to give you confidence in what you also want to include in your letters of engagement when it comes to providing advice. So I'm just going to affect the introductions who we've got on the call. So we've got Karen Eckstein. So Karen has been working for over 30 years dealing with professional negligence claims. She's been working with accountants, solicitors, tax advisors, and over the years, Karen's become increasingly interested in risk, preventing claims and managing risk. So she works with a lot of firms to do that. And then we've got Valerie Stewart, who's had over 30 years experience working in compliance. So helping businesses to become more compliant, helping them improve their businesses. And Val herself specializes in the not-for-profit sector. She specializes in audits and she specializes in AML. Now, the immense skill that both of these guys have got is that they've worked on the front line dealing with real life claims to accountancy firms. And it's this thinking that they've been able to put in today's session and also into our Oversweet product, which I'll talk to you a little bit about in a minute, just very briefly. But it's the experience that these guys have got that's so valuable that they're about to talk you through today. So they really know how to help you make sure you are as robust as possible in your firm. Now, just to introduce myself, my name's Danielle. So I'm a client success manager here at Go Proposal, but I also lead up the development of Oversweet and coordinate with these guys to make sure that it's as robust as it can be. Now, for those of you that don't know what Oversweet is, Oversweet's our automated engagement letter product. And the way that it works is we provide your firm with a robust set of engagement letters based on the specific information you give us about your firm. So we make sure that they're fully compliant and we review them every quarter. And again, it's this guy's wealth of experience that's gone into that. Now, that's not to say if you don't use Oversweet, you're not going to find this webinar useful. This is going to be useful for anyone because we're going to talk about the protections you're going to want to have in your engagement letters when it comes to providing advice. But if anyone wanted to run through of that, just so you know, that's what we're talking about when we refer to Oversweet. Now, in terms of what we're going to run through on the session today, so Karen's going to talk to us a little bit about the recent Supreme Court ruling that highlights why clarifying the purpose of your engagement with a client is so important. Then we're going to talk a little bit about the protections that you need in your engagement letters if you are engaging clients and advising them, whether that be ad hoc advice or specific pieces of advisory work that you're doing. We want to give you guys an understanding of where the risk actually lies with advice that you provide and how you can mitigate those risks with your policies, processes, and engagement letters. And then we're going to give you a little bit of a policy so that you can understand what constitutes ad hoc advice and when it's going to be considered as moving into a more clearly defined, bespoke, one-off project. And at the end of the session, it's going to be the Q&A. So there's no hard stop with this. If you guys have got questions, I'd type them into the Q&A box as you think of them, so they're fresh in your head. And then at the end, I'm going to ask Karen and Val to answer those questions for you. So do make sure that you use the Q&A box so we can keep all the questions concise. And we do also have a chat box, which is more for talking to each other, maybe having a discussion. So that's the way we're going to run the session. Now, I'm going to move forward to, sorry, I've just skipped a slide there. Give me a second. Yeah, so I'm going to hand over to Karen now, who's going to talk to you about why clarifying the purpose of your engagement letter is so important.
Great, thanks Danielle, and hi everybody, and thanks for joining us today. Yeah, over the years I've always said that when you're drafting an engagement letter, you need to think about who you're acting for, what you're doing, what you're not doing, who you're doing it for, which might not be the same as who you're acting for, and why you're doing it. So I've always said that. So when this Supreme Court case came out, and they said in that the purpose of the engagement, the purpose of the advice was so important, I was just going, yes, the Supreme Court agreed with me. So just very pleased about that. I'm not going to go into all the specifics of what the law was before the Supreme Court case because it was really complicated. The new case has simplified matters. I've always said that one of the biggest factors in a claim against the professional is the issue of the engagement letter and the scope of the retainer. So that's the contract between you and your client. Sadly, many professionals treat the engagement letter as a bit of a tick box exercise, just a form that's got to be completed so that they can start acting for their client to meet their firm's internal processes before that work can begin. So sadly, all too often, inadequate attention is given to the terms of the retainer, the agreement between them and the client. But if problems arise later in the day, the engagement letter will be forensically examined by the parties and the court and the lawyers to determine the precise terms and scope of the agreement, that retainer. So lack of care in drafting that document will come home to roost. It will come back to bite you. So focus is required on how that document should be drafted, and attention needs to be given to the guidance and training on how they should be completed. So you need to consider those questions that I've talked about when you're completing an engagement letter. So you've got to have a good precedent, a good standard document, but you've actually got to think about those questions. It's all very well having a really good precedent, but you've actually got to put the effort in and think about those questions. Who are you acting for? What have you agreed to do for that client? What are you not doing for that client? Who can rely on the work that you're doing? What is the purpose of what you're doing? Do you have an ad hoc clause? We'll come on to that a bit later. Does that engagement letter give you the protections such as a liability cap? Now, the oversuite engagement letters cover all of those points, but the one that you've really, really got to think about when you're drafting your engagement letter, what are you not doing? What are you not doing? And why are you doing it? So why is that so important? And that recent Supreme Court case has increased the focus on that last point. So there's been an awful lot of interest in that case recently. I'm not going to give you a forensic analysis, but I will tell you now a little bit about the case. It was an audit case, and it wasn't about the actual audit, but what was of significance was about an additional piece of advice that the auditor gave. So in that case, the auditor was asked a question about whether or not a specific method of accounting would be acceptable for the client's regulatory purposes. I'll just move this away a little bit. The client was using hedge fund swaps, and they wanted to know if that would be acceptable for their regulator, because the client was a building society. And the auditor in 2006 said, yes, that form of accounting was acceptable. And they told that the client that. And as a result, the client used hedge fund swaps. They entered into quite a lot of these swaps. In 2013, the auditor realized that that form of accounting wasn't acceptable, and they told the client. As a result, the client had to cancel those accounts, those hedge fund swaps, and they had to restate their accounts. Their accounts then showed that they didn't have sufficient liquidity on the restated accounts to satisfy their regulator. Because they had to end those hedge fund swaps early, they lost £32 million. So the question that the court had to decide was whether or not the building society could recover that £32 million loss arising from the early cancellation of those contracts from the auditor. So the court had to decide what was the purpose for which the auditor had given the advice and the extent to which its duty of care to protect the building society from those losses. And this went backwards and forwards through the courts until it got to the Supreme Court. And the Supreme Court held that the building society had asked the auditor whether it could use this form of accounting within the limitations of its regulatory requirements. It had received incorrect advice. Nobody was challenging that point. It held that the building society had suffered a loss which fell within the scope of the auditor's duty, and that the auditor was therefore liable for the loss suffered as a result of that incorrect advice, the 32 million. Now that 32 million was reduced for contributory negligence because it was held that the building society was overly ambitious in the way it carried out the swaps. But that's not the point that we're looking at today. The point is that that statement was that you could use this form of accounting gave rise to such a substantial loss. So where does this take us? Well, it means that you need to be very clear what you're doing and why you're doing it. So if you just say in your engagement letter that you're giving tax advice on a transaction, you need to say whether you're advising on the tax consequences of a transaction, or are you advising on the best way to structure a transaction for tax purposes? Because if you think about it, if you just say tax advice on a transaction, you're not saying which of the two it is. You're not saying what the purpose of your advice is. So you could be opening yourself up to a very wide claim. The client might think that you're advising on the best way to structure the transaction and that the purpose of your advice is to help the client achieve the best tax outcome. Whereas you might think the purpose of your advice is to give the client information as to the tax consequences of the outcome of the transaction. Another example, which I can't claim credit for, James Ashford came up with this one, is that you're advising your client on some tax planning relating to an owner-managed company, and they transfer 1% of the shares to the wife for tax purposes because you want the wife to be able to receive dividends for tax planning reasons. Subsequently, a claim is made that you should have transferred 5% so that the wife could benefit from ER. Should your engagement letter have made it clear that the purpose of the advice was to enable the client to benefit from dividends only, and that you're not advising on any wider tax planning opportunities? Or should you have advised the client on the opportunity to create wider tax planning benefit? It's abundantly clear from the court case that I've just talked about that there's going to be an increased focus on the purpose of the retainer. So that's something I've always thought was important. But what you want now is that you've got to be abundantly clear and set it out in your engagement letter what the purpose of your retainer is. Completing that part of an engagement letter and just thinking that it's a tick box exercise is going to land you in a lot of problems. And this is now so high profile that this is going to lead professional negligence claimant solicitors to really be alive to this. you've got to be specific about the questions I've talked about. What are you doing? What are you not doing? Who are you acting for? So are you acting, when you're acting for a company, are you acting for the company as an entity? Are you acting for the majority shareholders, the minority shareholders? Why are you doing it? Make that very clear in the engagement letter, because this is such an important point. And as I say, later in the day, that's going to come back and bite you. So I'll now hand over to Val, because she's going to talk about the protections you need in the engagement letters.
Hi, nice to, well, I can't see you, but nice to meet you all. As you know, I've been heavily involved in terms of the development of the Oversweet engagement letters, which I think Danielle will talk to you about a little bit later on. But the real purpose in terms of talking to you now is talking to you about the need for you to have a robust engagement letter in the first place. Obviously, Karen's already talked to you in terms of you ensuring that it's very clear in terms of what your purpose is. What I would say to you as well is that in terms of my experience, and I'm sure that Karen would agree with me on this, is that if a claim is being made against you, against your PI insurance, and, you know, in the old days, when I first started and you looked at it, you might look at a classroom of accountants, if I was talking to a classroom of accountants and I asked them to put up their hands if they'd ever had a claim made against them, and it would be a very, very small proportion of the audience that would actually put their hand up. But unfortunately now, across the board in terms of what we do, we live in a blame culture, and people are encouraged. I saw one relatively recently, so over this summer, if you're watching things on some of the Sky channels, you know, sort of the satellite channels, then the adverts that are on there are predominantly about insurance claims. You know, so you've got the ones, have you had an accident at work? Have you had a medical accident? All of those sorts of bits, because obviously for a certain category of solicitors, that's how they get a lot of their income comes from doing those, you know, no fee. Or they take a proportion of a contingency fee in terms of what it is that they're doing. The one that I saw over the summer, which was the first time I saw it, was about professional advice. So it was actually saying to people, have you received advice that has subsequently ended up being wrong? You know, come to talk to us about it. And so, you know, the issue that you have then is that now, if I'm looking at that same audience of accountants and I say to them, okay, put your hand up if you've ever had a complaint raised against you or a claim started against you. And even if the claim comes to nothing, the costs that are associated with you having to deal with your PI insurers, to deal with the correspondence, to deal with all of that bit is actually very both emotionally and sometimes financially draining in terms of what it is that you do. But my experience in terms of these would also suggest that the start point, if a complaint has been made, is that the PI insurers will say to you, can we see your engagement letter? And if you don't have a letter of engagement, the chances of them actually ending up settling on a claim are much higher, because you can't actually set out what your clear purpose is in terms of what you do. And all of you will know, if you've had any sort of insurance claim made against you, whatever it is that happens, however much you are at fault or whatever else, if the insurance company end up paying out, your insurance premiums will increase. So, you know, sort of, however it is that you do them, the really important part of this is not just because your regulators will say to you that you should have a letter of engagement in place, that'll be part of their practice insurance requirements, but it's also about you saying that for your own risk management perspective, so you have to have that letter of engagement in place. So not wanting to go over some of the things that Karen's already talked about, what a good engagement letter deals with is it does within your scope. So within the initial letter and your the scope of the assignment that you're doing, you set out within there who you're acting for, what you're doing, and why you're doing it. So that's your introductory thing that just sets the scenes. You obviously need to have robust terms and conditions. And within there, you know, I think now, at one point it was seen almost as being unprofessional for you to have something within your terms and conditions to talk about limitation of liability. But I think it's essential that you do that. You need to make it very, very clear what your responsibilities are. You need to make it very, very clear in terms of what level of liability you can accept. Because of the service regulations, you actually have to confirm that you have PI insurance. So, you know, sort of that has to actually go within your letter of engagement. And so you need to make sure that that's robust. And then what you have is that you're saying, you know, this is who we're acting for. So we're acting for the company, we're acting for the directors, we're acting for the individual, we're acting for the partnership. Whatever it is that you're doing, you're actually setting out that specific detail within the scopes that you do. But then what you're doing is you're looking at the specific services that you're providing, that within the proposal that you're making to the entity or to the individual, you're saying to them, look, this is what we're doing for you. We're doing your payroll for you. We're doing your audit for you. We're preparing accounts for you. We're doing your VAT returns, whatever it is that you're doing. And within there, you're very, very clear in terms of setting out. And when we do this, this is specifically what we're going to do, what our responsibilities are, and these are the specific responsibilities that you have, so that you're making it very, very clear to the people that are doing it what it is that that is being undertaken, what it is that they're paying for. We have, because I think, as usual, what will happen in a number of these circumstances is that you'll have people where you don't want to be in a position where every time that somebody phones you up and asks you a question, you've got to say, oh, hold on a minute, I can't deal with that question because I've got to I've got to issue you with a new letter, a new service schedule that's an addendum to your letter of engagement, just to set out the scope of what it is that we're doing, all the services, our respective responsibilities. So I think that, as Karen mentioned earlier on, what you'd normally have within your standard letter is something that will just say, that will give you some general guidance in terms of what will happen if there's some ad hoc advice that's being given. So if people are just asking you that one-off question in terms of what's there, and you need to make sure that you've actually covered that in terms of how that will work within your letters. And you need to make sure, and probably within the terms and conditions, that you have something in terms of that general advice, how that works for you. So, perhaps something that along the lines of saying to people that that advice can only be taken if it's been given in writing. You might have something about whether advice can be given by staff members or whether it's only advice that has been given by somebody who's a principal in the organisation, whether that's reasonable. And as Karen was talking about a little bit earlier on, being very, very specific in there that the advice can only be used for the purpose for which it's given. So that you need to make sure then that it's being that its express purpose is actually very clear to the individual. And if you're just giving that general advice and you're giving it in writing, then whether that's by email or anything else, then you need to make sure that within there you actually set the scene and you make it very clear the purpose for which that advice has been given. So the context within what it is, because sometimes people might ask you a question and they might give you only half a story. If you haven't done it as a major exercise in terms of what it is that you've done, you could give them something that is slightly misleading advice because you don't know the whole story. So you need to make sure that that context has actually been very, very clear. And obviously, the purpose of this seminar or webinar is actually to talk to you in terms of risks and how you actually manage those risks. And I know that not all of you will be subscribers to Oversweet, but it's just worthwhile mentioning in terms of here that all of those issues are actually covered within the Oversweet product.
That's great, thank you. I just want to clarify a couple of things there as well. So that line there about any advice can only be used for the purpose for which it is given. That's something we very recently added in there off the back of this case, just to enhance the levels of protection you've got in those letters of engagement. And for those of you that are wanting kind of a list of what Val's just talked about and a list of the protections you're going to need in your engagement letters, we are going to be sending the slides across, and there's going to be notes on those slides just telling you what it is exactly that you want to include in your letters. So don't worry about trying to remember it all right this second. Val, am I happy to move on to the next one, or did you want to add anything to that?
No, that's fine.
Great stuff, thank you. Yes, so obviously having a robust set of engagement letters is really important. If you do use Oversuite, we're giving you all of that, but there are still risks. So what Karen's going to talk to you about now is where the risk lies. Karen, I think you're muted.
That's such an amateur thing to do. I didn't want you hearing me slurping my coffee while Val was talking. I have been looking at the questions that have been coming through, and hopefully this bit will answer a lot of them. One of the questions was, somebody did ask the name of the case that I was talking about, and it is Grant Thornton and Manchester Building Society. So I'll just mention that one because that question was asked. A lot of the questions that were being coming through, hopefully they'll be answered by this section of the talk. If those people that have asked them, if you could comment whether they've been answered by this section, that will help when we come to the Q&A later. Val indicated this, but hopefully this will deal with it. Obviously, in your engagement letter, you should have a clause in there, which Oversuite does, but obviously this is for everybody, which says that you may do some additional work should we agree to do so in writing. And I call this the ad hoc advice clause. And this is because in the real world, as Val alluded to, if a client picks up the phone to you and says, oh, I've got a quick question, you're not going to, in the real world, say, I'm sorry, I can't answer that question until I've issued you a new engagement letter. The reality is you're going to help that client and answer the question. So you're going to have contact with the client and they're going to ask you, and you want to be able to help them. So if you've got a clause in your engagement letter that says we can do some additional work for you without issuing a new engagement letter if we agree in writing, then you need to be able to do that. The reality is if you don't have that clause, then that additional piece of work is done outside the terms of the engagement letter. That means that none of the protections that are in the engagement letter are available to you. That leads to risk for you and ambiguity for the client. There's no liability cap. There's nothing to prevent the client releasing that advice to a third party and that third party suing you on it. For example, most engagement letters and terms and conditions include a clause that if the client brings a claim, they only do so against the firm and not against any individual working in the firm. So there are so many reasons why it's important that any work is done within the auspices of the engagement letter and not in free form. As Val said, one of the points in the engagement letter is to say that the advice must only be used for the purpose for which it's given. So if you just give ad hoc advice to your client outside the terms of the engagement letter, so if you don't have this ad hoc clause and you don't operate it properly, then all of those risks arise. So the client could sue the individual, they could pass it to a third party, there's no liability cap. Very, very risky. So it's very important that all work is done under the terms of an engagement letter. The other reason why you want it done under the terms of the engagement letter is so that you can charge a fee for it. So the ad hoc clause and the additional further services clause should say that you can do additional work under that clause if you follow the right policy. So if you follow that policy, you can protect yourself, assist the client because they know what's going on, and you can earn more fees. And if you think about it, if, say, you just did an hour's work a week, if everybody in the firm did an hour's work a week and they didn't charge for it, but you were able to charge for it, think how much more profitable your business would be. So not only, if you've got a difficult client that phones up all the time and you use this clause, that client goes from being a very risky, expensive, non-profitable client to being a non-risky, profitable client. So the ad hoc clause is there, used properly, can turn your business from being very risky to being profitable. So it might be that your firm decides that any piece of work that's less than 2 hours and low risk can be done under the ad hoc clause. That's a decision your firm has to make. You then have to have a written policy. All your staff need to be trained on it so that they know what to do. So I think we're on to the next slide, sorry. They need to know, you need to have a way of making sure that all staff know what's in the engagement letter on every file. So the problem you have in the real world is that it may be that it's the client partner or relationship manager that agrees the terms of the engagement. So on an accounts file, it might be the partner that agrees it, and then they get juniors to do some of the work. They may not know what the terms of the engagement are, so they may not know who the client is, who's the person that's got authority to give instructions. They may not know what you've agreed to do, what you've agreed not to do, what the purpose of the retainer is. They've just been asked to do a piece of work on that file. So you need to make sure that all the staff know that. One way of doing that is to have an electronic alert. So if you think about it, in the good old days, I used to have a paper sheet on the front of the file that had all that relevant information on it. So if you could create that and have it as an electronic alert, so that every time you opened the file, it flagged up, so anybody working on the file knew that. So they knew what was inside the retainer, so then they would know what was outside the retainer, and they would know if there was an ad hoc clause and they could operate within it. So you need to know what's in the policy, and they also need to know on every file what's in the retainer clause, the ad hoc clause, and they need to know what's in the retainer. So they know how to operate the ad hoc clause. And then they need to know how to operate the policy. I'm going to come on in a second, Mike, to how you operate the policy. So you need to, first of all, if you don't have an ad hoc clause, it's really important you know that you must issue a new engagement letter or schedule every time you go outside the scope of your retainer. So first of all staff need to know what the scope of the retainer is by having this electronic alert. They need to know if there's an ad hoc clause or not. If there isn't an ad hoc clause, they have to issue a new engagement letter or schedule. They cannot even answer that phone call. The retainer, sorry, the scope retainer means what you've agreed to do for the client. So if you've agreed to do the accounts and the client asks you for a piece of tax advice, you can't do it if you haven't got an ad hoc clause, because it's outside what you've agreed to do. So if you then, once you've got that in place, then if you have got the ad hoc clause, then you've got a way of operating the ad hoc clause I'm going to come on to. So once the staff know how to operate, once the staff know what the retainer is and they know if there's an ad hoc clause, then they can operate the ad hoc clause. So can we then move on to the next slide and I'll tell you how to operate the clause.
Yep, let's go.
So this is how you do it. If the request is short and made over the phone, then you say to the staff, the client, okay, I'm happy to advise this. We've got a clause, we can operate and we can give you the advice under the clause, client agrees. If it's longer and made by email, ask the client to confirm by email that the advice will be given under the terms of the ad hoc clause. Then in both cases, when you give the advice, confirm in writing the facts, the reason that they've asked for it, so the purpose, the advice given, and that it was given under the ad hoc clause. And that entitles you to charge the fee. So it's quite simple. My view when setting up policies is that you've got to be in the real world. It's got to be easy to operate. So if they make a phone call, you just agree, you're going to do it under the ad hoc clause. You can sell that as very easy for the client. Oh yeah, we can do that because we've got a clause. Are you happy for us to do it under that? Great, okay. then you deal with it. If it's by email, you email saying, yeah, we can do that. We've got a clause that enables us to do that. Are you happy? Great. Then you deal with it. But in both cases, you confirm the advice in writing, the reason, the facts, the reason, the advice, and that it was done under the ad hoc clause. And that is your, if you like, your mini engagement letter. That entitles you to give the fee. So as a reminder, and I've put this on the slide so you've got it, you should state how much work should be done under the ad hoc clause. You can also state in there what sort of matters fall outside, even if they are short, so if they're high risk. Because in those ones, you need to issue a new engagement letter or schedule. And Val's going to come on to now when you should issue a specific schedule for one-off transactions that would fall outside the ad hoc policy.
Thank you, Karen. And I think hopefully that's been very clear and very comprehensive in terms of you understanding what it is that you need to do. I think that my view would be that where you're giving specific advice to a client where you perceive that the outcome of that can actually be quite high risk, where the financial impact of it could be material or significant in terms of what it is that you're doing, irrespective of the level of fee that you're charging for it, in those circumstances, it is appropriate for you to set out a specific schedule in terms of what it is that you're doing. So setting it out in the format. Now that schedule might be, you don't necessarily need to do the full-blown engagement letter. If it's very, very clear in terms of what your terms are, then what you do is you just say, this is an addendum to what our agreement is, and it's being done in accordance with the terms and conditions that have already been agreed within the engagement letter that you've signed on XYZ date. So, and if you have a reasonable relationship with your clients and so on, then that can be done either. It can be done something that's physically in writing that you're getting them to sign off and agree, or if you're, my understanding would be, and hopefully Karen would agree with this, is that if you're actually sending an email out to somebody and it's to a specific named individual, then if they come back and respond and that's a director within the company, for example, who's somebody that has the authority to be able to agree what's being done, or it's the designated individual within the organization, if that's what you've got within your letter of engagement, then the fact that what you've done is you sent it to that specific person and they've replied from that specific email address to say, yes, we agree with that, then that's as good as a physical signature in terms of what it is that they've done. And certainly I know that from the regulators' perspectives that they would actually accept that in terms of the equivalent of being a signature. So if that's what it is that you're doing, if you decide that from a risk perspective, this is something that's outside of the ad hoc agreement that you've actually got with the clients, then you can either look in terms of whatever it is that you're doing, and within the Oversweet product, we've got actually quite a wide spectrum of different types of service schedules that might be fit for purpose in terms of what it is that you're doing, but we can't cover absolutely everything. And it's dangerous for us to try and cover everything because, and what we don't want to do, the risk, like Karen said to you earlier on, is that you don't want to have something that is just a general one in terms of tax advice. We'll advise you on tax saving opportunities or something like this without you being very specific in terms of what the purpose of that is going to be. So my expectation would be that what you'd have is you'd have some form of standard layout where what you're doing is you're saying, right, in terms of the schedule of service, this is a service now that we're providing to you. This is the name of it. So this is what it is that we're calling it in terms of what we're doing, and just avoid names like general advice and so on in terms of what you do. Then what you do within there is that in your introduction, you set out the specific purpose of the schedule, so that's of the service, so the specific purpose for which you're providing the advice. So this is what it is that we've agreed is going to be done. And then you would set out what your responsibilities were, so what it was that you were going to be doing and what you were taking responsibility for. And then you'd also talk to them then about what you'd expect them to be doing in terms of how it was going to be. So it could be simple. It doesn't need to be long. It can just be 1 or 2 lines in terms of there. But as long as what you're doing is within this, you're setting out clearly what the purpose of the work that you're doing is going to be, and then what your respective roles and responsibilities are, so that if there is any debate or dispute at any point in the future, it is very, very clear what your understanding was and what the client could expect from what it is that you've done. So it doesn't need to be an onerous issue. It's just something that means that there's clarity in terms of what you're looking to do.
Now, that's a really interesting one, Val, because a lot of people have actually asked us, why can't we provide specific sort of schedules for things like tax advisory services, and so I just want to kind of reinforce the point that the reason that we can't do that within Oversweet for things like that is because of how bespoke those services are and how important it is for you guys to be defining the purpose of that sort of stuff. Would you agree, Val?
I would, absolutely.
Yeah. And are there any other example services that you might include in that list where you would recommend that people go and draft up their own schedules so that they can be really specific as to the purpose?
I mean, very often they're things that have a tax consequence, if that makes sense, in terms of these types of bits. But it may even be something that is as simple as somebody coming through and saying to you, well, I'm looking to do this particular exercise, and should I be so maybe I'm looking to buy an electric car, and I've made that decision that that's what I want to do. But what I want to talk to you about, because you're my accountant, is I want to talk to you about the best way for me to do that. So should I be buying it on hire purchase? Should I be buying it outright? Should I be going for one of the contract agreements that you can have, so where you will be returning it at the end of it? Should I be paying for it individually and then claiming expenses from the company or from the business, or should I actually be putting it through the business? Now, you can look at something like that, and particularly if somebody's looking at an electric car, the actual financial consequences in terms of the decision that they make could be fairly significant. And so in those circumstances, now I'm not sure that, because those options might be different in terms of the financial position that people are in, I don't think that you could put a schedule together that would be risky if you did one, because people might think, well, that'll do, but it becomes too general and it doesn't actually it's not fit for purpose in terms of making it specific to the purpose that you're being asked the advice, because that's specific to the client. So I think that's maybe one of the better examples that I could give, and maybe one of the more common things that people would be asked. And like I said at the beginning of it, and I think that Karen would say, that sort of realistically, part of what you do when you're assessing whether it's needed is to think about what the financial consequences would be, and therefore you're assessing the risk to yourself if it goes wrong.
If I can just support what Valerie's saying there, I think it's because it's specific advice. It has to be bespoke. So you can't do a schedule, a standard schedule. It's very, very difficult. It's very risky. And I was talking at the start about people thinking it's a tick box exercise. So it is very hard because it's the purpose. So those ones have to be really written by the client, i.e. the advisor, to set it out bespoke to the client's situation.
And correct me if I'm wrong, but if those guys are trying to do this and they ever want some certainty, or they're ever unsure, we can share your details with them. And these guys will be more than happy to help you and run through the schedules with you. And that's what they're really experienced at doing. So we'll give you their details at the end as well.
Yeah, absolutely.
Always happy to help.
Lovely. So I suppose that the question that people may have now is, how do you know when something's ad hoc, and how do you know when it then becomes a piece of specific service schedule, bespoke advice? So I suppose that's the question that I have next for you guys.
I think I mentioned in terms of when we were talking, my view would be that what you do is you have to take that step back and to think about it and think about what the risk is that's associated with it, which is the risk that you could give advice that might be construed as being wrong at some point, sort of if you're giving them a choice to make. And secondly, it's about the potential financial impact of that advice. So I don't think that you can say, oh, it depends on how much time it takes you to do it, because you could have something that you can answer quite quickly, but in actual fact, the risk and the financial impact of that could be more significant. So I think it has to be down to the individual that thinks about it. I do think, and we mentioned a little bit earlier on, that one of the protections that I would expect to see within the advice part of the terms and conditions is something to say, sort of you can only rely upon advice that's given to you in writing. So that, I suppose, provides an element of protection if somebody's asking you for an on the hoof answer over the phone, and you're just giving it to them over the phone, because within your terms and conditions, hopefully you're saying, look, if you just ask me for something and you're asking for an instant, is this better than this is, and you say yes or no on the phone, then the fact that if you're putting something in writing, it suggests that more thought and consideration has been given to what it is that you're doing.
I think it's all balancing risk. So the point about using the ad hoc clause is that you've got the protections in the engagement letter. So it's better than not having the ad hoc clause. So this is balancing risk. You use the ad hoc clause, then at least you are putting yourself under the protections of the engagement letter. And then it's better than not using the ad hoc clause. And then, as Valerie says, you can then use the specific schedule if it's appropriate, and it's a partner decision, but at least staff who answer a query use the ad hoc clause. It's better than not. So it's a real world scenario. So the ideal world would be to do everything under a schedule. I recognise that that's not going to happen for these quick phone calls and quick queries. So even if we'd want people to do that, they're not going to do it. At least we have a protection. So that's the situation. So if people answer quick queries and they do it under the ad hoc clause, even if they should use the schedule, at least the protections are in place. So that's the situation. So, but have a policy, and the firm has to make its own decision about the policies. The point is, if they ask a question, you can always over the phone say, this is too difficult to answer straight away, I'll have to come back to you. And at that point, you can then say, actually, we need a schedule for this because it's become more complicated. There's nothing to say you have to answer the question there and then. The answer can be, I will come back to you. That's a valid answer.
It's a really good point, Karen.
It is. And
I do make the odd good point.
Yeah. I think it answers quite well a question that's just come in from Alan as well, is that, sort of like you have to recognise that you're working within the real world. And ideally, and what I would say to you is, although, sort of for some of them, sometimes you're going to be doing that specific service schedule, and I think that they're useful. But if you're giving people advice and you're confirming that via email, then I think that you can still use that same sort of structure in terms of saying, look, this is who the advice is for, and this is the purpose of the advice and the scope of what it is that we've done, so that you can make it very, very clear how that's been structured. It's a lot of it's just about protecting yourself, really.
It's lovely, guys. Yeah, it's really useful to know. So we're going to move on to the Q&A now, and obviously, as those guys have said, we're going to follow up with the slides. We're going to follow up with sort of all the key points, key information, and I'm going to make sure at the end that you've got these guys' details if you want to follow up on any of the matters further with them. But I'm going to start reading through the questions in the Q&A box, and then I'll pop over to the chat to check we've covered everything in there. So going to kind of rotate between Karen and Val, but you guys will decide who's best placed to answer what. So Patrick, the first question that Patrick's asked right at the start, and we get this one a lot actually, Val, I think we've answered this one before. He's saying these changes to the oversuite are great, but do we have to keep on reissuing letters of engagement to existing clients as you update oversuite?
My answer to that is not usually. So I know that sometimes that maybe that seems a little bit too vague, but Danielle already mentioned earlier on that what we do within Oversweet is, as well as responding to requests that are being made in terms of additional schedules and so on that might be desirable within the product, and we actually monitor those, and if we're getting lots of requests for something, then we'll decide that that's something that should be put in. But also, what as a routine we do is that on a quarterly basis we do a review and a sweep to see whether there's been any significant regulatory changes. So we look at all of the stuff within the professional bodies, and obviously keep an eye out in terms of changes in legislation and so on, and we'll respond to those as they're needed in terms of what it is. And I think that then within the communication that is that comes out to you via Oversweet, what we'd aim to do is to actually tell you if there's something that comes in that requires you to take action quickly. And I think that, you know, so we've had a couple of those now where we've done them, and I think that my view would be that, you know, sort of even in those circumstances, sometimes it can be done by way of an addendum to the agreement that you've already got, as long as it's done in a clear way and you can demonstrate that that has been communicated effectively with your client.
That's great. And just to follow up on that, so with the Oversweet, you've got the quarterly roundup blog. So every quarterly update is summarised on a quarterly review blog. And at the end of the update summary, we tell you exactly what you need to do. So if me and Val have spoken and Val's told me that a new engagement letter does need to be issued, you'd be made aware of that. If it can just be an addendum, you'd also be made aware of that. And just to clarify, because I know somebody else asked this question, what actually is an addendum, Val, just to ask a question, like how can you send something as an addendum? Would it be an email? Would it be the website?
Again, I think, you know, sort of my preferred way to make sure, because if you just put it onto the website, then you aren't taking control. If it's something that's important, you've got no control over whether the client's actually seen it. And so they could say, well, you know, I didn't see it when it was on there. So I think that your communication has to be directly with the clients, and my preferred method would be that, you know, sort of you can do it by email, but as I mentioned earlier on when we were talking about the additional service schedules, is that if you're sending that email, if you send it to admin@ or info@, then I think that, you know, sort of the person who it's designed for, so the person who's your nominated individual, so the person who agrees your engagement letters and so on, they might say, well, that didn't come through to me because that's just gone to a general email. So you need to make sure that it's specific to the person that it's being addressed to, who has the ability to be able to authorize what it is that's being done. And then I think it's perfectly acceptable for it to be done by email. You know, ask them for a read receipt, or, you know, sort of the ideal one would be that you ask them to just respond to it, just to say, yeah, they agree and understand what it is that they've seen.
I would endorse what Val says there. Patrick's asked a question saying some of his engagement letters are 3 or 4 years old. Should he reissue them and reprice the client? Pricing is a commercial decision for you, but in terms of reissuing, I would say yes. I always say that engagement letters should be reviewed every year. Doesn't mean you have to reissue them, but you should review them every year to see whether or not they are still relevant and whether or not the terms of what you're doing for the client remains the same. So I think if they're 3 or 4 years old, then you should be looking at them and see whether or not that your terms and conditions are still relevant, and whether or not the scope of your retainer, so what you're doing for the client, is still relevant.
I would add to that if they're 4 years old, your terms and conditions will be out of date.
I would say so.
We've had issues in terms of new money laundering regulations. We've had the GDPR regulations. Yeah. And so just in terms of the specific regulations, and so I reiterate what Karen says, that you should review them at least on an annual basis. And the two things that you should be looking at is whether there's any changes to the terms that are important for the clients, and any changes in the services that you provide, which need to be clarified with the client. And when it comes to the services that you provide, it's also about making sure that what you do is that if it changes so that you're not doing something that you did before, that you also make sure that you clarify that with the client. So it's not just about adding things on. You know, if the client with Making Tax Digital has started to do their own VAT returns, and you've changed from preparing their VAT to perhaps reviewing what it is that they do, then you need to make sure that that's being clarified, because suddenly your responsibilities are slightly different in terms of what it is that you're doing.
And isn't it that as well, Val, like directors can change? So if
Yes,
directors of the
absolutely.
business change, you need to be getting their signatures as well. So, you know, reviewing every year is a really important thing to do.
Yeah.
What I might do, guys, I know for those of you that are using Oversuite, there's a lot of questions around whether or not you can issue an engagement letter without a proposal. At the moment, obviously you can't, and they're very integrated, but there's a process that I can recommend you follow in terms of if you're just wanting to reissue an engagement letter and not reprice for now to deal with that challenge first, just a way you can condense your proposals, just kind of tailor them to exactly what it is you're doing. And what I might do is follow up with a Loom video showing you how to do that so that you can understand how to get that process right. There's been another question from Carol Jackson. She said that she charges monthly fees for annual accounts and corporation tax return, but has a very hands-on approach with the client throughout the year. How can she address a potential return of fees if they were to cancel mid-year, please? She would like this to be very clear in the engagement letter.
I presume you want me to answer that one. We've had quite a lot of discussion about that previously. It depends what your engagement letter says on the basis on which you charge monthly fees. So if you charge monthly fees on the basis that it's a monthly charge, then they wouldn't be entitled to return of fees. If you say that you will charge a fixed fee, which is only payable on the provision of the annual accounts, then that's a different matter. So you need to deal with that in the engagement letter. My view, as Danielle knows this very much, is that you should not commercially put in the engagement letter that they're entitled to return of fees. And that's because you're encouraging them to cancel mid-year. So my view is that you say that you will charge a monthly fee, not a fixed fee for the product, if that makes sense, because you'll be incurring costs month on month. And if you say, I'm going to charge you X for provision of this product, then all that work you've done, you sort of lose the value of that, if that makes sense. If they do cancel mid-year, you've got to think about the reason why they're cancelling. Are they cancelling because they've decided to move to a cheaper accountant, or because they have their own personal reasons, or are they moving because they're dissatisfied with your service? So then there's a different dynamic and a different reason. If you decide to return fees because of their personal reasons, that's one thing. So why should you be out of pocket? If they've decided to cancel mid-year because you've done something wrong, you might end up with a professional indemnity insurance issue if you return fees without your insurer's consent. So that's a whole different debate, which I don't think we've really got time to cover in detail today. But the variety of reasons why I don't think in your engagement letter you should offer to return fees, and why I think your engagement letter should be, we will charge X per month, not X per year, if that makes sense.
Yeah, I agree with you, Karen, in terms of where it is. And I think that if you are somebody who's hands-on and you provide services on an ongoing basis, then, you know, sort of if the client does leave and you're actually, if you're providing services on an ongoing basis, very often that end bit that's talking about you preparing the annual accounts or doing the tax return, even though you might have a little bit of work that's pushed towards the end of the year, I think that you'll probably find that the actual charges that you raise, the time that you spend is much more evenly spread throughout the year than you might initially think. So, you know, as long as it's seen as being fair, then I don't think you've got a problem.
Brilliant. And Suzanne's asked us, so the example of the changing director shares to wife is an interesting one, but how would you get the purpose of this across to the client, as you don't want to be issuing an engagement letter for every piece of advice?
Again, I think that one's me. That again, you would be saying that if you were dealing with that as an ad hoc piece of advice, I don't think you should. I think that should be in the schedule. And you would just say that you're advising on the issuing of shares for the purpose of ensuring that the wife can receive dividends and not for any other tax reliefs. Full stop.
Yeah, which can be done via an email, which is what we said before, to be fair. So I just think it is that whenever you're giving that advice, that you just think about the actual, the reason that you're giving it, and the financial consequences and the risk that something, you know, could come out of it. And, you know, I just think you need to protect yourselves, because that's all that Karen's talking about in terms of what it is that she's doing. You might think it's a bit of a pain, but you won't think it's a pain if somebody makes a claim against you. You'll be phoning us all up and saying, thanks very much for giving us that advice, because what you've done has actually protected us.
If it helps, I did a piece of analysis, and I've done an article on, and I talk about a straightforward claim could probably cost you about £100,000 in terms of excess, additional premium, wasted management time, loss of staff, loss of reputation, loss of clients.
And actually, even, you know, I have somebody who I deal with, and they had a claim that ended up being, you know, sort of, it ended up being thrown out in the end. So it was a claim that had been made against them, but the process that they had to go through in order to answer the questions that were being made by the PI insurers and all the rest of the bits and pieces that they'd done, they actually added it up, and they reckon that they spent £40,000 worth of time. Yeah. So it was huge in terms of what it was that they'd done with them. And in their particular circumstances, as again we've said, and Karen's reiterated, if what they'd done was they'd had a clear engagement letter, that could have been dismissed by the insurers right at the beginning. So it would have been something that would have saved them just a massive of time and stress. You know, he aged quite significantly in the 18-month period that it took to sort of get to a final stage where it said, well, actually, there's nothing to answer here.
Okay, great. Can you give us a written example of what we would say in an email to cover purpose? That's from Suzanne. This is a great question. I think this would be a nice thing to follow up with.
Yeah, I think the problem that you've got in terms of there is because it is specific in terms of what it is that you're doing. So I think we have talked before about, you know, sort of maybe that part of the templates that we can put together is going to be that template structure, if you like. But I think that if you follow what it is that we've got on the slides here in terms of what it is that we'd expect to be within there, then I think that helps you. I think the issue is that you have to look at it, and you have to think about, again, as Karen said before, you asked the question, you know, sort of what is it that I'm doing? You know, who's my clients? So who am I giving the advice to, and what's the purpose of what it is that they've asked? And as long as you're covering that within what it is that you're doing, then you should be okay.
Great. And Patrick's just said here, looking at who you're acting for, this really explains why you can't bundle personal tax returns along with the work you do for the company, two separate clients. So he's just reiterating on some things we've already discussed there. Phil's asked us, what happens if you provide VAT advice to someone who is a client as a sole trader, but the advice pertains to their limited company, which has yet to be incorporated?
That's it. When you that happens quite a lot. So what you do is you say, I am giving you the advice for the purpose of your incorporation.
Absolutely.
So, and that's fine. What you have to, so your purpose is that. So you're advising Fred. But what you mustn't forget, which is what I see a lot of, is that when Fred incorporates, you need to issue a new engagement letter to Fred Limited.
Yeah.
And you absolutely have to remember to issue a new engagement letter, because Fred Limited is a separate legal entity from Fred. So you can set out the purpose. And if you remember at the start, I said who you're advising and who you're acting for and who you're advising. They may be different. This is one of those scenarios where you're advising Fred, but the advice is for Fred Limited when Fred Limited comes into existence. So you need to make sure that when Fred Limited comes into existence and you start advising Fred Limited, you do issue a new engagement letter.
That makes sense. And Phil's asked an interesting question, Karen. What exactly is this electronic flag alert? Do you have any ideas of what sort of software you could use for that?
I'm not an IT specialist at all, but it may be that you can set up on your own systems, depending on what systems you use, just something so that when you open a file on your system that when you open the file, it just brings up something. It can be done. You just need to talk to your own IT guys on, what it is. I'm happy to chat to you about it, but I'm not an IT person, but I know it can be done.
Yeah. I think sometimes you can do stuff quite simply as well.
Yeah.
If you just tell people that in terms of the routine that they've got, that if somebody asks them about providing an additional service or whatever, if your engagement letters are in a place where they are accessible to everybody that might need to see them, that what they do is that they say, okay, sort of like everybody's got their computer system, so it's better if they're held electronically in some form, and what they can do is they can just go in and look to make sure that what they're being asked is covered either within the ad hoc clause, or it's being covered within a specific schedule of services that's already there for that client. That's an education process, I suppose, in terms of everybody.
Yeah, lovely. And Simon's asked one, I think that's for me. We've had this a few times throughout the session. Is it possible to produce an engagement letter without a fee proposal? Thinking of updating clients where the fee's already been agreed. So the answer to this is no. The engagement letter and the proposal are very heavily intertwined, and actually in parts of your engagement letter there'll be references to your proposal and the proposal ID, which lists out all your services, and in your proposal there'll be references to your engagement letter. So at the moment the documents are intertwined, and we're not going to separate them out for the time being. However, I don't know if there's a little bit of miscommunication or confusion around this, but you don't have to change the fees. So you can issue the client a new engagement letter, you can supplement that with a proposal, but you can overwrite the fees when you're creating that proposal, so these are just stuck to their original agreement. So I'm just wondering if you guys are aware of that, and if you've got any specific barriers to doing that, what those are. I'd love to chat it through with you separately, if you want to drop me an email about that as well, but I will follow up with a Loom showing you how you can do this and keep the fees the same but issue a new engagement letter. And Eamon, hi Eamon. Eamon's asked, can I clarify if a bespoke client email is required now for all proposals issued that accompanies the letter of engagement is now recommended or necessary outside of the generic protections of Oversweet? If the answer is yes, the email must be by default cover the areas mentioned, which includes who you're providing the service for, why you're doing it, the purpose of what you are doing, what you are agreeing to do and what you are not agreeing to do, and includes an ad hoc clause for any work not being covered by these terms, inchargeable beyond a certain time, 1 hour, and this thus negates the need for an additional engagement letter. Could either of you guys answer that one for us?
Yeah, I'm happy to take that one. I think that if you already have, sort of, if you're an Oversweet user and you already have the engagement letters that are being set up, then I think that they have the ad hoc clause within them. They have the protections in terms of what we've got within the terms and conditions. And the only need for you to put in an additional service schedule will be if you are providing advice outside of the ad hoc agreement. So that's what we've been discussing this morning, really. So I don't think what we're saying now doesn't necessitate you going out and redoing everything.
The only point I was making is you still need to think about what you're doing.
Yeah.
That it's there, but you need to think about what you're doing.
Absolutely.
And then Michael's asked here, I think this section has answered this, but it's still unclear whether Oversweet will automatically generate the required documentation or I'll need to create it. So Oversweet will generate as much of the required documentation as it possibly can for you. So it will generate the correct generate the correct scopes for your different entities. So that's your limited companies, your sole traders, your partnerships. That's clarifying who, what, and why, and the general responsibilities. It will cover your terms and conditions and your liability caps. It will cover introductions with the ad hoc clause within it, and it will cover all your terms and conditions with all of your ad hoc advice clauses. So all of the content you need will be covered, and it also provides you with over 60 service schedules that we can provide for you. where we won't automatically generate the required content, as Val and Karen were explaining before, is where the piece of work is too specific, it's too bespoke. So we'd be putting you in danger if we were to draft a service schedule up for that. So in those situations, that's when within Oversuite, there's a blank service schedule template that allows you to draft up your own responsibilities, the client's responsibilities for those specific pieces of work that you're doing. Have you guys got anything to add to that?
No, I think that's it.
Great. Carol said, would it be possible to get feedback on my questions, please? I have to get ready for my client meeting. I think we've answered Carol's questions now, but I'll drop her a quick email after this just to check, because I know she's jumped off now. Phil said, are you suggesting a separate specific engagement letter for each director that asks about purchasing an electric car?
No. Oh, go on, Val.
Yeah, okay, that's cool. I was going to say sort of, yeah, no, but except for the fact that if maybe it's a good or a bad example, but the issue that you've got there is that it depends on whether the advice is being given to the company in terms of the best way, or whether the advice is being given to the individual. Mm-hmm. And if the advice is being given to the individual, then you might actually have to issue it separately to the individual directors, because their circumstances might be slightly different.
And on that anyway, you may not actually have an engagement with that director,
in
which case you would have to issue an engagement letter. If you've only got an engagement with the company, this is something that is a big risk anyway. People don't think that who are you acting for? Are you acting for the company, or are you acting for the director? If you've only got an engagement with the company, then you have to issue an engagement letter when you're giving advice to the director about his personal circumstances.
Yeah.
Brilliant. Right. And Penny's asked us, if you are giving specific advice, you're going to have to give a specific schedule each time we do anything extra. Is the ad hoc clause going to be too general?
No, that's a decision for you to make. The ad hoc clause covers you. If it's something risky, you might decide to use the schedule. That's a decision for you as a firm to make. I'm happy to have an away from here discussion about that. What we're saying is that we've given you the protections within the ad hoc clause, and then you can decide whether or not the ad hoc clause is sufficient or whether or not it warrants the schedule.
Brill. And Patrick's asked us, he's in the middle of talking to a client about her buying an electric car. Are you saying I should ask the client that we both agree this advice is covered by the ad hoc clause?
Well, if you have an engagement with the client, so as I've just said, if it's the individual, then you need to decide for yourself whether or not it's under the ad hoc clause, whether you want to issue a separate schedule.
And then agree that with the client.
And agree that with the client.
Yeah.
Brilliant. And Martin has asked us, we have a free included in the fee telephone advice policy for questions that are less than 30 minutes to answer and which need no research or written work. Are we covered when our engagement letter that makes it clear that all such telephone inquiries of this nature are covered by the ad hoc clause, or do we need to repeat this to clients each time in writing?
I would say that there's also a bit within the advice part of the terms and conditions, if you're using Oversuite, that actually specifies that advice, you'd only stand by advice, so they can only rely upon advice that's given where it's been given in writing. So if it's a telephone advice line, then my view would be that that's covered, if Karen agrees with that.
Yeah, you'd need to repeat the advice in writing. For a variety of reasons. One of them is that by not doing that, you are making yourself very at risk, because a client could say, you've told me to do X and you've got no record of it. And you've got ambiguity, because the client might think you said X when you think you've said Y. But I would just say, we're giving you the advice under the terms of our telephone advice line, which is under the engagement letter. That's not ad hoc clause, that's your telephone advice line.
And Bev's asked one that we've been asked quite a few times now, Val. Should we have a separate engagement letter for the limited company and the directors for the self-assessment tax returns, please? We've got some FAQ and help content on this at help.goprosa.com. We've got a video on that, but Val, yeah, go ahead, and Karen.
Yeah.
Yeah.
But yes, it's much preferred. And I think that, when you're dealing a system nowadays where people have it, sometimes the reason why people didn't want to do it was because of the amount of paper that was involved if you were sending stuff out to each of the individuals. But it's handled very well within Oversweet, and because it's all electronic, then I don't think that that's actually an issue anymore, personally.
And they're separate legal entities.
Yeah, absolutely.
Lovely. And Carol's asked, yes, but she said, yes, perfect. Thanks, Karen. That was my thinking. I'll check the wording carefully. So she's just thanking you there for your answer. And Patrick said, Karen, is the distinction between monthly fees and an annual fee paid monthly covered in Oversweet? Or I need to answer that one.
That will depend on how you've set it up, I presume.
Yeah. So between monthly fees and annual fee. Let me double check that for you, Patrick, but I'm pretty sure that we've got those, the way we charge for different services covered there, Val, haven't we?
We have.
In the terms and conditions, I'm sure.
It's how you tailor it effectively.
So it's your choice, isn't it?
Nice. Yeah. Great. Penny said, one of the issues we are having is tying the monthly amount to the year end in terms of calculating the alignment fee. It depends where you start in the year to do the annual accounts. So that sets up us a request of return of fees. How do we then quote a monthly non-returnable fee?
You say, well, so long as you say that the monthly amount is a monthly amount, not an annual amount that you charge monthly, that's the point. And you can say in your covering email, if you want to, that you are charged. You could say this year we're going to charge you 200 a month. Next year we'll charge you 150 a month. Because this year we'll have to do more work for you each month because we've got less time to do the work in. But next year we'll have more time to do the work, so we'll only charge you X per month.
I think one of the issues that you can have here as well is that you have to remember that if you're doing that within a monthly fee and you don't want to be doing it in terms of, sort of, we've got these constituent parts in terms of how much it's costing for each of these services. And, sort of it's when we've provided that, but even though we're spreading that cost for you, it's when we've provided that particular service that we can take that aspect of the fee. The downside could be, it's also if a client leaves you partway through the year, it might be that the amount of work that you're doing is actually front end loaded. So where it's on a monthly basis, sort of if you're saying, right, that's it, you walk away, you might actually be at disadvantage rather than the client being at a disadvantage. But I think it is about you making sure that you've made it clear in terms of, whether this is a monthly fee for what it is that we're doing for you. And, hopefully clients won't leave you partway through the year. Generally speaking, there has to be a fairly catastrophic event, if you like, for them to want to go. But sort of you just have to work out what's best for you, really.
And Bradley, yes, I agree. You say the work is a fee, a monthly fee, not an annual fee payable monthly.
Brilliant. And Simon's asked us, does Oversweet include directors being personally liable for fees if the company does not pay? We've had this one, haven't we, Val?
We have, and the answer to that is no, it doesn't. And I think that is because, and again, it's nice to have Karen here in terms of her legal background, but my understanding in terms of there is if you're doing that in a company and the letter of engagement is for the company, then if the directors are going to be held personally liable, then that's an individual liability, and so the company can't actually bind the directors for a personal liability. So I have a moral issue with it personally, but I also think that in terms of it being something that would be supportable and would work, it's not supportable unless it was by the individual.
You would have to get separate documents signed by the directors to personally guarantee the fees.
Great, thank you guys. And another great question from Ben. If we have an older engagement letter, do we need to get a new engagement letter signed again, or is it enough to just issue a replacement without signature? Thinking our engagement letters pre-Oversweet and using Oversweet have lots of changes, so not sure if it needs to be signed again completely to be active.
Yes, if you're going to issue new engagement letters, then there's a new contract. So you would, my recommendation is that you would treat it as the new contract and send it to the client and ask them to sign it in the new way, particularly where they're old and you're getting new ones and they've got new terms and conditions, and they might have a new liability cap in there, all sorts of new changes. So I would ask the client to sign it again.
I think there's Val, we were talking about something there where obviously if we're doing a completely new engagement letter,
Yeah.
like Karen says, we do it that way. If it's a renewal after 12 months, is it that you may be able to get away without asking for another signature, depending on if the directors change or not?
I think that where you're making a change, because sometimes where it's a renewal and you're just issuing it as a refresher and it hasn't changed, I don't think there's a problem within that. I think that where there's a change in terms of either the services that you're providing or alternatively in the terms and conditions, then I think that you need to make sure that that has been specifically highlighted to the client. But generally speaking, that would have been done by way of the emails that we've talked about. So, I think that that's fine.
Lovely. And Penny Rowden has said, terms and conditions, I think I'm right in saying that the same ones are used for all engagement letters. My query is around charging of interest to businesses for late payment of fees in the terms of conditions. Can this be applicable to individuals?
My recommendation is that terms and conditions are your terms and conditions, so that they should be identical for your business and then sent out to all clients so that they don't adapt, they don't change. The changes are in your engagement letter, not in your terms and conditions.
I agree.
And then a question from me, I think. Patrick, Danielle, Go proposal lists out each monthly service on the repeated fee note. I'm assuming you mean the proposal there. Can these be analysed in the letter of engagement and then be bundled together as one line in the monthly fee note? Could you just clarify a little bit more about what you mean there, Patrick? I don't know, are you asking to show just one line, one fee in your proposal and have a breakdown of all the services in the letter of engagement, if that's what you're asking? If not, if you want to pick this up with me and drop me an email, right, okay. So yeah, in the proposal, you can just show one total fee for all of the services without a breakdown, if that's what you're looking for. So there should be an option when you're getting the calculation to show totals only, and that will prevent the breakdown from showing in the proposal. So does that give you the answer you need there? If not, just jump on the chat if you have any problems with it, and the guys can help you with that one as well. Great, so I think we've gone through all the Q&As. I'm just going to check we've covered everything in the chat as well, because I've seen a couple of people pop some stuff in there. So this was a good one just to clarify. When is the letter of engagement effective? Is it at the date we issue, or is it the date the client signs?
It's effective from the date it's agreed. So if you get a signed one, that's the best evidence of agreement. Yeah. Engagement letter is the evidence of your contract. It's not your contract itself, which you can get your head around that. So if the client signed it, that's the effective date of the engagement.
Would you agree? Because there was always the Institute, so the Institute of Chartered Accountants in England and Wales, I think at one point took some legal advice, and their expectation was that if you had a letter of engagement with the client and the client hadn't signed it, but they still provided you with the information to provide the service, that was deemed acceptance of the terms.
It depends on, have you got evidence that they received the engagement letter? So one of my Karen handy tips, which when we talk about risk spikes, I'll come on to, one of my handy tips is that you send the engagement letter to the client with something else. So it might be, here's the engagement letter, and can you send me the 64.8, or can you send me some money on account or something. So if you send it to them with something else and they send you the other thing back, you've got some evidence that they received that document, and then their conduct is deemed acceptance of the engagement letter. Yeah. So if you just send them the engagement letter and they don't challenge it, then that could be evidence, but they could say they didn't receive the engagement letter, and just a receipt, email receipt, isn't always sufficient. So Yes, it's some evidence. The best evidence is the signed engagement letter. Second best evidence is that they've actioned the email that they got with the engagement letter.
And of course, within, if you're using Oversuite, you've got the signing function,
Yeah.
anywhere. So it should be a straightforward process.
Great. See if there's anything we've missed. I've answered that one from Alan. Thank you, Mark. That's lovely. Just Mike, I've answered this for Mike Braun, but if you could just clarify, just to make sure, do the terms of engagement meet the requirements of our accounting body, ICAS in my case?
Yes. So what we've done is with a number of accounting bodies, and when you go into Oversuite, it asks you in terms of which accounting body you're affiliated with. And so what we've done within there, and there's a lot of commonality in terms of what the requirements are within those professional bodies, is that and part of that quarterly scan is to look to make sure that there's been no changes in terms of their rules that mean that they've got an expectation of things that need to be included that we haven't included. So yes.
That's how we handle that. And just a few more in the Q&A now, from one from Penny Rowden. So sorry, the question is the Oversuite terms and conditions mentioning late payment interest? She's concerned that we can't apply it to individuals, so we shouldn't apply that bit to the individual engagement letters.
I think the whole point is that the terms and conditions cover everything, and then if you can't charge it, it won't apply, but they're there. Does that make sense?
Yeah, it does.
Brilliant. And Michael's asked, for accountants based in Scotland, is a verbal agreement prior to the receipt of the signed LOE acceptable? Do we know? Can we answer based on Scotland?
I think that's difficult because the verbal agreement won't cover all the terms and conditions.
Yeah. And Michael has said where the LOE has been sent and received.
Where it's been sent and received, well, then you're looking at conduct. I'm not a Scottish lawyer, so
yes.
I can't really advise on Scottish law, I'm afraid.
Murat has asked, is it bad for ACCA in E&W to do a charity in Scotland? How would she cover herself?
Okay, so if you look at the charity sections in terms of what they do, they actually specify in terms of, for charities, part of what you do when you're doing the letter of engagement for them is to determine what type of charity it is and where it's registered. So there is nothing to stop you from acting for somebody in Scotland if you're if you're actually an institute member, an ICAW or an ACCA member, and you're situated within England and Wales. Aside from the fact that obviously you have a responsibility, a professional responsibility, to ensure that you don't take on work that you don't have the knowledge or the experience to do. So you have to be competent to do it. So you'd have to be comfortable that you were happy with the differences between the charity registrations for Scotland and one that was actually situated within England and Wales. And I would also say within there whether their Scottish registration is actually ancillary to them having a registration as a charity within England and Wales, or whether it is actually the main registration. So if it's ancillary, then they're still governed largely by the Charity Commission in England and Wales. If it's something that is their main registration, then you'd need to look, and you can look at the OSCR, so it's the Office of the Scottish Charity Regulator. If you put that into Google, then that will give you a lot more information in terms of what the differences are between a Scottish and an English and Welsh charity, or a Northern Ireland one nowadays. But
great, thank you, Val. And Patrick has asked, he's a sole trader, but he practices as a chartered accountant, plural. This seems to confuse Oversuite. I'll have to pick that up with you separately, Patrick, if you want to just drop me an email so you can just explain what you mean by that. And Michael Clarkson has said his specific issue is that he has a client who is recently bereaved due to COVID, and he's grieving and can't bring himself to engage, but there is work required. The husband is the original client and signed an engagement letter on behalf of the limited company, and he died. There is a lot of work required, including freezing and extension of deadlines.
On that point, the company will still remain. So you've got the company still exists. Obviously, you've got issues there as to who has authority to give instructions on behalf of the company, but the company does still exist. So you've sent the engagement letter, and verbal agreement to act has been obtained from the wife. Does the wife have authority on behalf of the company? So that's the question to ask. So she does. You do have, so I would do a file note of your discussion with the client, and that will be your evidence of the agreement to the engagement letter. So then you can act.
Agree with that entirely.
Real, thank you.
I've got that one right.
Marat has just said only registration is Scottish. I think that's to do with the question before, Val.
Yeah, it is.
Yeah.
And so all I do is I just say to you, I mean, if you want to speak to me separately about it, it's probably something that can be done outside of this. So I think I'll contact details a little bit later on. So just drop me an email and we can talk about that one.
Brilliant, guys. And that's just what we're going to move on to now, is just sharing those contact details. So just how you guys can get in touch. I know some people mentioned it's giving them a bit of a headache, but we are just giving you what you need so that you can really protect yourselves, especially off the back of the results of this case. If you do use Oversweet, most of it's covered already. The engagement letters are always going to be up to date, and the only thing that you will need to do is draft up specific schedules for those one-off pieces of advisory work that you do using the blank templates. So if you do want to get an Oversweet demo and you're not using it, then you can book one. We're sharing the slides with you, so you can book. You can click on the link at the end. We'll also pop it in the email we're about to send. We've also got the ways you can get in touch with both Karen and Val. So obviously Karen's been professional negligence claims, defending those. She can help you with risk matters, help you with preventing claims. Val specialises in audits, AML, not-for-profit, so she can help you with all of that. And if you guys ever want to draft schedules up and you need someone, a pair of eyes to go over it, you can utilise these guys. So their email addresses and contact details are there. And I will share them again after this webinar in the follow-up email that goes out. Now, these guys have also been really kind and offered something extra to both of you. So Karen has got what she calls a Risk Bites Club. It's still all around preventing claims. It's something that you can join on your lunch break, where you can ask Karen specific questions, and she's offering all Oversweet members 10% off their membership to that. And then we've got Val herself, who runs regular courses on compliance. She's got a general accounting and updates course that's going on in November and in October, and usually all Oversweet members get these for free. So they get all of Val's courses for free, but she's really kindly offered to let every single Go Proposal member join this in October for free as well. So Val, would they just need to go on your website as well to gain access to that?
I think that what happens is that you issue them with a code, so that will generate them being able to go onto that course for free. And just to reiterate, in terms of those, I run a series of courses, so it's the general accounts, the accounts in general update, which covers regulatory issues. It covers issues in terms of accounts disclosures and various other bits and pieces, and then a chunk on anti-money laundering, because that's always very topical for practitioners. It's a 2-hour session.
Brilliant.
Yes, and the Risk Bites Club, if you just drop me an email, I'll happily send you details.
Yeah, and we'll follow up with all these details as well. But yeah, thank you guys so much for joining. I hope to see some of you on some Oversweet demos. Please just get in touch with me, Val, Karen, if you need anything at all. And we just want to help you be as protected as possible, really, and as robust as possible. So really appreciate you joining today, and we'll follow up with recordings and all the information. Thank you, guys.
Thank you. Nice.
Thanks for listening. Nice to meet you all.
Bye, guys. Bye.
Bye.